Hello and welcome to the IAIS Global Seminar. We're delighted to have you with us for our 3-day program filled with insightful discussions and opportunities to engage with the IAIS leadership. We've got a rich agenda ahead and I encourage you to actively participate throughout the event, and let me briefly walk through what we have planned. So today, we begin with an Executive Committee Leadership Dialogue. And for the Q&A session, please feel free to share your questions in the chat or else request to take the floor directly. And then tomorrow, we will hear updates from the chairs of our macroprudential, policy development and implementation assessment committees. And these 3 consecutive sessions will also provide opportunities for you to ask questions and to share your perspectives. And then lastly, on Thursday, we will conclude with 2 expert panel discussions, one focusing on risks in the global insurance sector and the other one addressing natural catastrophe protection gaps, both critical for the global insurance and supervisory community. And if you're unable to attend any of these sessions live, don't worry, recordings will be made available on our communication channels after the event. So with that, and without further ado, I'd like to extend a very special warm welcome to our Executive Committee Chair, Shigeru Ariizumi. Shigeru, the floor is yours.
Thank you. Thank you very much, Jonathan. I hope everyone can hear me well. Good morning, good afternoon, and good evening to everyone, and welcome to the IAIS Global Seminar 2025. I'm delighted to see such a strong turnout today. We have more than 850 participants coming around the globe, gathered to engage in a dialogue about trends, risks, and also opportunities in the global insurance sector. Today, we will cover some of the most pressing issues and opportunities the industry is facing and elaborate on how the global supervisory community is addressing these issues, including navigating risks to and from the sector in an increasingly volatile geoeconomic environment, addressing growing nat cat protection gaps, dealing with the impact of artificial intelligence, all in an effort to support insurance to deliver on its societal purpose of enhancing resilience. I would like to take this opportunity to share how the IAIS is supporting our members to navigate these uncertain times and outline our key priorities under our new strategic plan 2025 to 2029. This year marks a significant milestone for the IAIS. As all of you know, following an intensive period of standard setting, we now embark on a new chapter, one that prioritizes the consistent and effective implementation of the standards we have agreed. Among these efforts, our commitment to timely and coordinated implementation of the ICS among our membership is unwavering. Last month, the Executive Committee endorsed high-level principles that will guide the development of a detailed ICS implementation assessment methodology, setting the stage for a structured process for the next few years. This includes baseline assessments by jurisdictions in 2026, the aim to start detailed jurisdictional assessments by the IAIS in 2027. This approach ensures that the ICS becomes a truly global standard, fostering consistency, transparency, and comparability in the supervision of IAIGs. As part of this process, the final aggregation method being developed by the United States, which will be their implementation of the ICS, will also undergo an implementation assessment. This will follow the same timeline and methodology as ICS implementation assessment in other jurisdictions, incorporating both qualitative and quantitative analysis, whilst also accounting for the specificities of the AM. When fully implemented, the ICS will act as a common language for cross-border group-wide supervision, strengthening the resilience of the global insurance sector and safeguarding policyholders across the globe. Another cornerstone of our work is the IAIS Global Monitoring Exercise, which enables us to identify and respond to emerging risks and trends in the insurance sector. Our mid-year GMAR, published at the end of June, highlights critical themes that will shape our focus for the remainder of the year. These include geoeconomic fragmentation, which very much poses challenges to insurance management, both on the asset side as well as the liability side, increased investment in private credit, and the adoption and governance of AI. Rising geopolitical tensions and economic divisions are amplifying risks. For example, credit, foreign exchange, liquidity, interest rate, and underwriting risks, to name a few. We are closely monitoring these developments and will provide a comprehensive analysis in our December GMAR. Given the cross-sectoral nature of these challenges, collaboration with global policymakers and international fora has never become more critical. The IAIS is actively engaging with the World Bank, the IMF, the G7, the G20, as well as other standard-setting bodies to ensure that insurance supervisory perspective is well represented in global policy discussions. One area where this collaboration is particularly vital is our new strategic theme, supporting insurance to fulfill its role, fulfill its societal purpose of building resilience. This theme underscores the importance of insurance in addressing protection gaps, promoting financial inclusion, and ensuring the fair treatment of customers. These are complex challenges that demand coordinated, multi-stakeholder solutions, and the IAIS, deriving its strength from the diversity and expertise of its membership with over 200 jurisdictions, is well placed to contribute to developing solutions. I am especially proud of the IAIS leadership in addressing NatCat protection gap, a growing concern in the face of increased extreme weather events. This year, we contributed to the G20 agenda alongside with the World Bank, advocating for multi-party solutions to NatCat protection gaps, particularly in emerging markets and developing economies. I encourage you to join our panel discussion on Thursday that will highlight this work further. Looking ahead, we will collaborate with the World Bank and other partners to develop practical resources that supervisors and policymakers can use to address these gaps in their jurisdiction. Later this year, we will also publish a GMAR special edition on the potential financial stability implications of NatCat protection gaps. As we move forward, the IAIS remains deeply committed to advancing its mission, promoting effective and globally consistent supervision of the insurance industry to develop and maintain fair, safe, and stable insurance markets through collaboration, innovation, and practical solutions. This global seminar is an opportunity for us to reflect, exchange views, strengthen our collaborative resolve to address the challenges and opportunities which lies ahead. I look forward to hearing your comments and questions during the dedicated Q&A segment later in this session. Thank you very much for your attention, and I now hand it back over to Jonathan to guide us through this session. So Jonathan, the floor is yours. Hand it back to you.
Thank you, Shigeru. Thank you for your leadership and those instructive remarks. So we'll now turn to our Executive Committee Leadership Dialogue. And so let me start by welcoming to the virtual stage our Vice Chairs. So first of all, Petra Hielkema, also Chairperson of IOPA. Then Andy Mais, Insurance Commissioner of Connecticut. And Siham Ramli, Director of Communications and International Relations at ACAPS Morocco. And collectively over the next hour and a half, our EXCO leadership will provide an overview of some of the issues that are top of mind among insurance supervisors around the table at the IAIS. And we'll have an opportunity for Q&As at the end of the session. You can send us your questions via the WebEx chat, or you can let us know that you'd like to take the floor, also via the chat, and you can then unmute yourself and ask your question. Please remember to state your name and organization when you do so. Just a reminder that tomorrow we will have a series of sessions with the committee chairs, and this will provide an opportunity to ask questions specific to their work. So we may refer some of your questions to those sessions for more detailed responses. So with that, we'll now turn to the discussion with our EXCO chair and vice chairs, and we'll start with a few sort of broad perspective questions to get the ball rolling. And Shigeru, if I could start with you. So we are living at a time that feels like it is characterized by ever more rapid change, plus more recently, geoeconomic uncertainty and volatility. So what do you see as the challenges and opportunities for the insurance sector and the IAIS in this rapidly changing environment?
Thanks, Jonathan, for your question. So let me just kick it off. I think what we are witnessing right now, the growing speed, complexity, and interconnectedness of the challenges is we have never seen something like this actually before. If you look at macroeconomic and geopolitical uncertainties, if you look at technological disruption, if you look at protection gaps, this is something that we are facing is quite significant and also quite interconnected. Importantly, this is not only just risks for us, but it also could provide for opportunities for the sector to make a difference and to deliver, as I mentioned in my opening remarks, the societal purpose to enhance resilience by the insurance sector. And more importantly, we also need to be mindful that global issues these are global issues which require global responses, many of which touch upon a broader public policy objectives. And that is why we have embarked on and expanded our engagement with policymakers to ensure that the critical role of the insurance sector in responding to global societal challenges is reflected and reinforced. And this includes IAIS leadership's presence at the World Bank Group and the IMF spring and annual meetings, as well as contributing to global leadership forums such as the G7 and G20. And I think this has been quite rapidly developing right now. This year, we have enhanced our collaboration with the G20 South African presidency, and which we will have a chance to dive into deeper later in this session, building on our successful existing collaboration with the IMF co-hosting a joint event, and also with the G7 in collaboration with the OECD, which produced the high-level framework for public-private insurance programs against natural hazards. It also includes our collaboration and coordination with the Financial Stability Board on financial stability topics. And I'm grateful to be able to bring in a cross-sectoral sort of perspective with other standard setting bodies, being the vice chair for the board of IOSCO. So within the IAIS, I think there's a strong recognition that our ability to act decisively and collaboratively in the face of adversity, as we have proven during this past various recent challenges, stems from our ability to work together. And I think this is a very important point. And we have a very good track record at the IAS of working together to reach a conclusion that is beneficial for the overall insurance sector. And through our coordinated efforts, we have achieved major milestones in ensuring effective insurance supervision around the world, including the adoption of the insurance capital standard in December last year. But we must not be complacent to the increasingly intertwined emerging risks on the horizon. And so the IAIS will continue to rise through these challenges, and we will do so through supporting its members in delivering on the societal purpose of insurance. So we stand ready to work in that direction.
Well, thank you very much. And Petra, maybe I can turn to you to build on that. So how exactly will the IAS go about being able to be agile and responsive to this rapidly changing global landscape?
Yeah, thank you, Jonathan. And hi, everyone. I fondly remember how we came together in Dubrovnik and Seattle, and now it's online. It does feel a little bit different, feeling an IAS sphere very much, the community you are here, but being virtual. I still hope that you all will stay tuned. We really prepared, I think, for a good week, and we really appreciate that you are joining in such large numbers to talk about this, because in the end, I think that is what IAS is. It's coming together, supervisors with stakeholders, and discuss important topics, especially now, as Jonathan and also Shigeru already said. So the work of IAS, and whether that is on risk assessment or on standard setting or implementation, it is truly global. It is also very relevant, definitely at these times. So how do we manage that? I think what we do as supervisors, and we share that across the globe, is we take an evidence-based approach. We take an evidence-based approach to identify priorities that we derive from quantitative and qualitative analysis. And we do that with strong engagement with stakeholders and exchanges with all of you and anyone that is listening in today, but also those beyond that are helping us by sharing data, making that effort to share the data. Thank you very much. It truly informs our work and helps us move forward. Now, then how do we do that further appropriately? I would say, first of all, it's in terms of risk assessment. And you all know the global monitoring exercise, where we try to have a comprehensive framework for assessing inward and outward financial stability risk. We do that based on the rich data set that you help us to build. And when I say you, it's approximately 60 of the largest international insurance groups around the globe. It's also aggregate sector-wide data that we then get from our supervisory colleagues. And thanks to that effort, we cover around 90% of global written premiums when we do the GME. And I think that is an impressive number. Now, with that data and through this analysis, we can assess the impact of key risks and trends on insurance markets. And definitely in uncertain times like this, that is more important than ever. We don't just do that for fun or to monitor. No, we really want to detect the buildup of systemic risk and discuss then what are appropriate supervisory responses to systemic risks. We also want to learn from certain risks that may be already showing up bigger in one jurisdiction or part of the world, and then support others that this might be coming and how to deal with that. And I personally, I always benefit from those dialogues, and then I hope you do as well. Now, the second way we deal with it is that we do it in a very inclusive and consultative approach. So to develop our standards, we really want to make sure it's not just a standard, but it's actually something that can be implemented, and that it then also benefits the activity that it focuses on. And in order to do that, we consult, we listen to you, we do hearings, we organize webinars to get your feedback. And here I would say the ICS is a perfect example. Now, everyone knows that is not an easy task, and it isn't. But the reality is that through a decade, sometimes it takes time, but through a decade of robust working together through consultations, through field testing, through monitoring, we actually reached an outcome. And I think that is, in the end, how we do it. We identify a significant development, that's the monitoring part. We then conduct a gap analysis to the standards we already have. If we already have something, then why add? And this is what we do going forward. Now, going forward, that definitely reaches on to the climate work we've been doing, on structural shift works, but also on the AI work that I will talk about a little bit later on today. And if the standard is fine, it's fine, but it doesn't mean it's easy to supervise. It could be that the standard is there, but then the reality is still something that, how do I supervise that question? And here we have targeted application papers that then help to make sure that how we apply that standard in practice is still understood, is done to a large extent, or hopefully even more harmonized way. And with that, it helps supervisors, but because we consult on that, you also help us to do that, and hopefully you are informed of our expectations. And finally, what is important is the feedback loop. Feedback loop is essential. How does it work? Is it still fit for purpose? Do we need to make changes? We keep doing that. So inclusion, consultative approach, where we start from a gap analysis. Do we need more? If we decide we don't need more, we still want to make sure we can apply it. And while we are doing that, we have this feedback loop to make sure that what we do is still relevant in changing times. Finally, I said that we do it risk-based, we do it on risk assessment and data, we do it together with stakeholders, we have this way of developing it, but ultimately, this can only happen through strong collaboration within our memberships on cross-border and cross-sectoral issues, but also in strong collaboration with stakeholders, with our industry. And I think we have a strong track record of being able, with all that input, as a supervisory community at the international level, to find compromises and ways forward. So that's how we do it, Jonathan. Back to you.
Great, and I think I can only echo those comments that really this strong social capital and what is clearly a continued commitment to collaboration at the international level is really a key asset of the IAIS. And it's going to be particularly an asset when the insurance sector itself is going through these rapid evolutions and some structural changes in many ways. So Andy, if I could turn to you and get your perspective on what you see as perhaps some of the more interesting structural changes that we're seeing in the insurance sector.
Thank you. And thank you all for being here. I just want to echo what Petra said early and what Shigeru said. It's really great to be here. You know, I kind of miss that whole getting together in person bit, but we're being good, and I'm hoping this proves to be a really informative and a great way to share during the course of these seminars. If we take a look back, and it seems like so long ago right now, we had that extended low interest rate period. And that resulted in significant structural shifts, especially in the life insurance sector. And part of what we're seeing, part of what we've seen, we've done the global monitoring exercise since 2020. So what's that, 5 years now? And we have observed, we've analyzed, we've reported on the structural shift in and the life insurance sector, which primarily involves increased investments in alternative assets, so that includes private credit and securitizations, and greater reliance on cross-border asset-intensive reinsurance. Again, we go back to what seems in so many ways like so long ago, but that historical period of prolonged low interest rates, that need for higher returns for private credit and for portfolio diversification, that fueled a shift towards alternative assets historically. But what we've seen, even though we are now in a higher interest rate environment, that trend continues. And this cross-border asset-intensive reinsurance involves complex transactions across multiple jurisdictions, asset managers, and reinsurers. Key drivers, the way we see it, include differences in prudential frameworks, capital requirements, and tax regimes, and that allows cedents to benefit from advantageous pricing, let's call it that, to offload capital-intensive liabilities. Now, to be clear, the global insurance sector's exposure to alternative assets is relatively limited in current times, but significant regional exposures do exist, and further rapid growth in these areas could heighten systemic risk. It could be forced asset liquidations, you could have disruptions in the lending markets, and you could have financial instability from mass asset-intensive reinsurance recaptures. Interconnectedness with the broader markets through the high leverage and concentrated transactions could amplify those systemic risks. Now, what do? Well, mitigation measures include closing the information gaps, improving risk management, and as we do here, sharing best practices. And all of these issues, Jonathan, underscore the need for robust supervisory tools, for enhanced data availability. And as all of us here around the virtual table this morning know, for the need for strengthened international cooperation. We're certainly reviewing all our supervisory frameworks to address these emerging risks. Now, the increased allocation of investment capital to alternative assets and the higher adoption of asset-intensive reinsurance agreements are relatively new and complex developments in the greater scheme of things, and they often involve counterparties across multiple jurisdictions. And to that end, together, we've just consulted on an issues paper which dives deeper into these issues. As always, I'd like to thank all the stakeholders that provided us with the valuable feedback that enabled us to provide this paper. And the issues paper emphasizes the need for consistent and robust supervisory practices globally. Certainly at the IAIS, we're advocating for continued international cooperation and information sharing among supervisors so that we can address these challenges directly and effectively, Jonathan.
That's great. Thanks so much, Andy. And lastly, if I could turn to Siham, and Siham, let's look a little bit ahead. And with all of these rapid changes, what do you consider the biggest challenges and opportunities for insurance supervisors in the decade ahead? And maybe you can also add, what is the IAIS doing to support supervisors in being ready for that? Thanks.
Thank you, Jonathan. Like my colleagues Petra, Andy, and Shigeru, I'm very happy to be here with you today, even virtually. It is always a pleasure to participate in the global seminar and engage in such stimulating discussions. As a global community, the IAIS has worked closely with its diverse membership to identify the challenges and the opportunities facing supervisors. This work has fed our strategic direction and will guide our future effort to support our members. We identified 3 strategic themes in our strategic plan that will guide our work from now until 2029. strengthening supervisory response to climate change, adapting to increasing digital innovation and cyber risks, and supporting insurance to serve its societal role. Allow me briefly to elaborate on each of this theme. First, strengthening supervisory response to climate change. Climate change is fundamentally reshaping risk landscapes. We are seeing increasing physical and transition risk that impact insurers, underwriting, and investment activities. Supervisors are actively integrating climate risk into supervisory frameworks and prudential requirements. In April, the IAIS published its final application paper on the supervision of climate-related risk. This provides a comprehensive overview of how the IAIS existing insurance core principle can be applied to address climate-related risk. Moving forward, we will continue to support our members with practical materials and knowledge sharing sessions to help them addressing climate-related risk within supervisory framework. Second, adapting to increasing digital innovation and cyber risks. The rapid pace of technological change is transforming the way we live and work, with significant impact on the insurance sector. Supervisors have to oversee their fair and responsible use of emerging technologies like AI and machine learning, while also exploring how to leverage them in a responsible manner. To support members, the application paper on the supervision of AI was published on 2nd of July, providing additional guidance to assist implementation and examples of good practices. Meanwhile, cyber risks continue to escalate, posing significant operational challenges. We are consulting on a draft application paper on the supervision of operational risks, and we invite all the stakeholders' feedback until 29th of September. Finally, our third final strategic theme, which is supporting insurance to serve its critical societal purpose of building resilience, speaks to how insurance supervisors play an important role in supporting and indeed shepherding insurers to deliver on their societal purpose, and includes a multitude of complex topics which will require a multi-stakeholder approach to address. I think strengthening societal resilience is an opportunity for supervisors as well as the industry to demonstrate the transformation of potential of insurance by addressing climate risks, bridging protection gaps, and fostering responsible innovation. Supervisors can ensure that insurance fulfill its societal purpose of protecting lives, livelihoods, and economics. And economies. So the IAIS will continue to support supervisors in this mission, helping to build a more resilient future. Back to you, Jonathan.
That's great. Thanks, Siham, and thanks everyone for the initial, let's say, broad picture responses and really touching on some of the key trends that are impacting our work. Now, before we go to the open Q&A session, I would like to dive a little bit deeper into some of the specific issues that we've covered, and maybe a couple of questions to each of the panelists. And maybe we stay with you, Siham. And you mentioned our new strategic plan, 2025 to 2029. And for those of you who follow our work will be aware that this is really a sort of milestone new chapter that we're in. It marks the end of an intensive standard setting period and the start of a period where the focus is much more on implementation of our agreed standards. And then, of course, the other big change, I think, that Siham, you mentioned, was this new third strategic theme around supporting the role of insurance in building societal resilience. Now, you lead the engagement of the IAS with emerging market and developing economy jurisdictions, a very important constituency within the IAS membership. Could you talk a little bit about what this shift to implementation means for EMDE members and perhaps some of the main projects that the IAS is doing in this space?
Sure, with the pleasure. First of all, I would like to reaffirm the strong commitment of the IAS leadership and community towards supporting emerging markets and developing economy countries. Our effort towards these jurisdictions remains a top priority as we work together to strengthen insurance supervision and promote financial resilience worldwide. Supporting members from emerging markets and developing economy jurisdiction is truly central to the IAS implementation strategy. Under our new strategic plan, we are further strengthening our implementation assessment and support framework. This focus on implementation is of a great value for our members, particularly from emerging markets and developing economies jurisdictions, as it bridges the gap between policy frameworks and practical on the ground impact. It ensures that agreed standards are effectively and proportionally implemented in ways that strengthen financial system, build resilience, and expand access to insurance. A key part of this proportionate implementation, that means adapting global standards to fit local context, which is really important, and enabling supervisors to manage risk while fostering resilience and stability without holding back development and innovation, which is particularly crucial in EMD jurisdiction. When it comes to implementation assessment, we continue to build on our robust implementation assessment work to help members understand their level of observance of the IAS supervisory material. Tools such as our ICP self-assessment tools or thematic peer review help members identify illustrative example and strengthen their regulatory framework. Our work doesn't stop here. We also provide ongoing implementation support through peer exchange on key issues and trends through our forums, development of practical guidance, and enhanced capacity building in cooperation with our implementation partners. This strong commitment to support members is reflected in our continuation of our partnership with the Financial Stability Institute and the Access to Insurance Initiative, now hosted and convened by CGAP, part of the World Bank Group. We are also expanding our partnership with the Key Training Institute, including Toronto Centre, the Frankfurt School of Finance and Management, and the International Actuarial Association. This collaboration will further enhance our capacity building and support to our members. Finally, we have started reviewing our implementation approach to ensure that assessment and support are fit for purpose, benefit our broad membership, and translated into further understanding of ICPs and strengthening regulatory and supervisory frameworks.
That's great, Siham, and thank you for making the point that the diversity of the membership of the IAS is one of our key strengths, and that we really strive to make sure that we're adding value to our members from EMDE jurisdictions, many of whom I hope are on the session today. I wanted to pick up on one of the points you mentioned, also support to implementation through supervisory guidance, and we produce this guidance and supporting material. Perhaps you could mention a few examples of how this focus on supervisory guidance, particularly on priority topics for EMDE jurisdictions, how that has progressed this year. Thanks.
Thank you, Jonathan. And as you may know, all of you members of EMD represent almost half of our membership. This is natural, brings a strong EMD focus on the work of the IAS. I am pleased to say that we see very good engagement across the EMDs, which is encouraging as we work together to strengthen insurance supervision globally. Let me share a couple of concrete examples of our work in this area. One specific example is that our risk-based solvency implementation forum continues to provide members with guidance on how to practically implement risk-based solvency regimes. Last month, a public version of our guidance on transitioning to a risk-based solvency regime was published to facilitate supervisors' engagement with other relevant stakeholders. The forum is continuing discussions on key aspects of implementing risk-based solvency regimes, including on ORSA and implications of IFRS 17 for the implementation of solvency regimes, with two short thematic member-only notes planned to be finalized by the end of this year. So another example is that through the IAS Financial Inclusion Forum, the fifth, we will be consulting later this year on updates. One of this update will concern the application paper on regulation and supervision in support of inclusive insurance markets, benefiting from more than a decade of insights since the paper was first published in 2012, including a focus on the role of supervisors in supporting inclusive insurance markets that can foster the financial well-being of consumers. The forum continues to support members' effort to advance also the financial inclusion through peer exchange, knowledge development, and advocating for inclusive insurance at both the supervisory and policy-maker level. Lastly, I would like to express my sincere thanks to our implementation partners such as E2II, the FSI, and Toronto Centre. Their support and commitment, much of which enables supervisory capacity for our broad membership, particularly in EMD.
Thank you, Siham. And maybe we can pick up on a particular theme that you mentioned there, which was around the topic of the challenges to societal resilience posed by protection gaps, and in particular natural catastrophe protection gaps that have been a priority topic for us, particularly in the face of increased frequency, severity of extreme weather events that we see on a daily basis, and including the terrible events in Texas, for which we pass on our sympathies to US colleagues. Now, this is a topic that's getting a lot of priority from us. We will have a dedicated session on Thursday, which I encourage you all to join. We've put considerable effort into bringing this issue to the global policy space, as Shigeru set out. And most recently, we've contributed to an input paper together with the World Bank for the Sustainable Finance Working Group under the South African G20 presidency, reflecting the growing urgency to address insurance protection gaps on the global policy agenda, and the commitment of the IAS to provide whatever leadership we can on this topic. Now, Andy, if I could perhaps turn to you to provide a bit of an update on this work.
Thank you. I hope you can hear me. It looks like my microphone is working now again. And I do want to thank you, Jonathan, for the sympathies expressed. As you know, the disaster that we saw in Texas is probably, I would say, representative of the way that climate risk has changed. We now know, certainly in the past few years, there are more deaths from inland freshwater flooding than there are from storm surges from hurricane. And we all need to work together to address these issues. And by we all, I mean all of us here, the insurance ecosystem, which is why the IAIS chose to work with the G20 Sustainable Finance Working Group. And our contribution there built on what I would call our established work in this area. And I would refer you to our call to action, which was published, it was November, I think, 2023, so almost a couple of years ago. And that highlighted the role that insurance supervisors can play in addressing protection gaps. And a key message of this report, and to echo what Siham and others have said, the key message was that all supervisors, either implicitly or explicitly, should have a basis for action. We have a basis for action regardless of any specific mandate or in addition to any specific mandate we may have. Now, and by we, I mean the IAIS, contributed to the 2024 G7 high-level framework for public-private insurance programs jointly with the OECD, and that provided practical steps to establish effective public-private schemes to address protection gaps and mitigate the impact of natural disasters. Now, for the Sustainable Finance Working Group, the paper we developed together with the World Bank focused on multi-party solutions. And again, I keep going back to this because there is no singular party that can do it. The issue is greater than any of us as individual groups, individual regulators, individual industry members. But it is an issue that we can all address together as part of the ecosystem. And that's why the paper focused on those multi-party solutions to address the NatCat insurance protection gaps and to provide possible actions that can be taken by various stakeholders to address these protection gaps. It does include, if you haven't had a chance to read it yet, case studies based on a survey conducted of our members, and it underscores the critical role of insurance in managing the financial risk, the financial impact, and, of course, the physical risk of NatCat events. In addition to that, of course, insurance is vital to supporting recovery efforts. And what we also need to do, what we have been doing, what we must continue to do is to promote resilience. It's better to address the issue beforehand than to have to clean up afterwards. We know that it's a great investment. Yeah, and any investment in resilience gives you a huge payback. We need to address that. And the paper also reflects the growing importance of addressing insurance protection gaps on the global policy agenda. And our involvement in the G20 process has also provided a platform to engage with a broad range of partners with expertise on this topic. And for example, this report benefited from input from the Consultative Group for Assisting the Poor, the OECD, and the UN World Food Program. Now, beyond the input paper, we at the IAIS are going to undertake follow-on work. As a next step, we will develop a practical resource together with the World Bank and other partners that can assist supervisors and policymakers in addressing NatCat protection gaps. Addressing those protection gaps, and I can't say it often enough, it remains a priority for the IAIS. It is part of our strategic theme number 3 in our 2025 to 29 strategic plan, and it prioritizes work on supporting insurance to play its key role in building societal resilience. To let you know, later this year, the IAIS will publish a GMAR special topic on the potential financial stability of implications of NatCat protection gaps. So this is a promo, and I think it's worth reading. This report will focus on how insurance protection gaps create spillovers to other parts of the financial system and the real economy, such as banking, real estate, households, and government finances. We will continue to focus on this issue, Jonathan.
I mean, maybe to continue with you and maybe a little bit of a sneak preview. So we know this topic and our input paper will be discussed actually next week at the G20 Finance Ministers and Central Bank Governors meeting in Durban in South Africa. There will be a high-level event with ministers and governors to raise awareness and action on this topic, and the input paper that we've worked with the World Bank will be published, hopefully still in July. But maybe we can give a bit of a sneak preview in terms of what the paper talks to in terms of particular insights or actions that stakeholders can take.
Happy to do that, Jonathan. Now, the input paper will broadly, as I mentioned, provide actionable insights for jurisdictions to enhance their foundational efforts, to establish effective insurance-based solutions, and again, include multi-stakeholder collaboration to narrow those protection gaps. The paper itself provides certain foundational steps that are critical to the successful implementation of insurance-based solutions and which can be pursued regardless of a jurisdiction's specific circumstances. And these foundations should be integrated into broader strategies to address protection gaps with the approach, stage of advancement, and specific targets tailored to each jurisdiction's stage of development. Now, let me go through some of the foundational steps, and they would include assessing protection gaps and exposure to NatCat risk. This would involve assessing a jurisdiction's overall exposure to NatCat events, the underlying drivers, and any expected future trends. Also, we need to have, as a foundational step, a risk-based and proportionate regulatory and supervisory system. Consumers, again, we are all stakeholders in this. There is no single part of our entire ecosystem that should not be engaged, and we need to help consumers. We need to work to improve financial literacy, to increase risk awareness. We need to educate consumers on the value and importance of insurance. And along with our partners in industry, we think it's important to incentivize risk reduction, such as, for instance, underwriting practices that incentivize prevention measures in order to reduce losses from NatCat events. Again, we know that an investment in resilience pays off. It pays off in lower losses, and it should pay off in lower costs for the people that are making these investments. It is a societal good, and it is good for the industry, and it certainly is a almost basic step that we have to take towards reducing the NatCat protection gap. Now, if we build on these foundations, insurance-based solutions can play a transformative role in addressing protection gaps via their ability to reduce risk and to limit economic losses. And some of those solutions might include developing innovative insurance products and mechanisms to improve affordability, accessibility, and uptake of insurance, certainly here in the United States, and I'm presuming this is an international issue as well. There are those who do not find the insurance that they need affordable, and there are those who simply don't have access to insurance. What do? We need those innovative products. We need those innovative mechanisms, and we can use, I know Siham is on this panel. Morocco's doing an incredible job with public-private partnerships. We need to promote parametric insurance. We need to expand microinsurance, and I know we're going to hear a lot about AI. We do need to leverage technology. We have to have, in addition to that, robust risk transfer mechanisms that will help provide more accessible and affordable insurance. Now, that could include global reinsurance, cat bonds, cat insurance risk pools, because these mechanisms will help us spread the risk across larger pools, which is not a surprise that this is a founding feature of insurance. We spread the risk, we reduce the financial burden on individual insurers, and we increase the availability of affordable coverage in high-risk regions. Mentioned earlier, and sorry, Siham, I'm going to go back to Morocco here because I think it's a shining example of what can be done to reach out to the population. Yeah, there are others throughout both my own country and elsewhere, public-private insurance programs. We need to establish those and those can take many forms, and it can range from the provision and sharing of data on natural hazards, joint efforts on preventive measures, and cat risk insurance programs that involve risk sharing among private insurers and governments. Now, underpinning all these approaches, and I know I've said this before, but I will keep saying it, it's the fact that effective multi-stakeholder collaboration involving supervisors, governments, private sector participants, international organizations, multilateral development banks, civil society in general. It's the most powerful way to address these challenges. And again, I'm going to throw in another promo here. I think Jonathan already mentioned this, but I would encourage you to tune into the panel session on Thursday. Some of these ideas will be further considered, and I think it will be enlightening. Jonathan?
That's great. That's keying it up nicely for Thursday. But now let's shift slightly and turn to another strategic theme for the IAIS. And Andy, you referenced the opportunity that comes with digital innovation. And in our new strategic plan, one of the strategic themes we know is adapting to increasing digital innovation, particularly as we've seen with the surge of activity around AI and the interest in the potential that has, but also with significant implications. Not only for the insurance sector, of course, but for the entire economic system and the financial system. Now, Petra, as both IAIS EXCO Vice Chair, but also Chair of the IAIS's FinTech Forum, I know you've been thinking about these issues a lot. What are we seeing in terms of the impact of AI on the insurance sector? And what are some of the opportunities, but also risks that supervisors are paying attention to?
Yeah, good question, Jonathan, and but a fair question and an important question as well, because it is going fast. If you told me a year ago that in July 2025, I would be getting briefings saying drafted with the help of AI, dear Petra, where I would actually tell staff in some instances, why don't you use the AI tool we have to get this organized? I wouldn't have believed you, but that is the reality. And I think the same is happening in any other company, including insurers across the globe. Everyone at his own speed, but it is happening. And if you look at the uptake in industry and how insurers respond to surveys on how they use it, where the majority was thinking of it in a proof of concept. These days, the majority is using it and thinking of ways forward. So it is happening. It's accelerating globally. It has significant impact on society. It will have more. Those who really, I think, know it better than me tell us it's only the beginning. It comes with benefits. It really does come with benefits also in the insurance sector. You see that it can help to on enhancing policyholder retention because you have more personalized products, because people are better served. It comes with cost reductions, particularly in the back office, which is also good in a time of definitely in those parts of the world where you have an aging population, where the labor force might be shrinking and you still need people to do a lot of work. Well, here AI can help. It comes with increased efficiency in policy administration and as well in claims management. And we've seen that in customer surveys in the EU, that where we ask consumers what they like, it's actually faster claims management that they much appreciate. So lots of benefits, but it also, as everything, comes with downfalls, with negatives, with risks, and the risks, that's our tasks. So this is what we also look at. And I think the most important part where we need to look at when it comes to the risks that are part of AI is that it really stands on the quality of the data that you use. First of all, so what are the data? What kind of data do you use? What's the quality of the data? What information is in there? Is it biased information or not? I think that is a first. It comes also with some privacy considerations. Like if you need the data to assess, what if someone says, I don't want to share that? Then are they going to be excluded? Does it have an impact? Some things to consider. So finally, if you use the outcome of data sets, what is that outcome? Because the outcome is as good as the data. Is it biased? Are we discriminating? Are we not treating people fair? I think that is the unconscious part of it that we need to be conscious about. And then there is, of course, the use of data and this AI for data analysis for things that you shouldn't be using it for. For example, setting a price on the basis of identifiers that are not risk related, but that you just check, like, how likely is this person to move away if I raise the price, which has nothing to do with the risk profile of what you are insuring. So finally, so that is, I think, one of it on the sales side. And then finally, it is also the control that insurers themselves have of managing the AI tools and the actions of those AI tools that they are employing and putting into practice in their company. The opaque and complex nature of some of the AI systems can lead to accountability issues, where it becomes difficult to trace decisions and actions back, where the question is who is responsible for this outcome. And these questions and these concerns it's paramount to address these. Why? Because, and we go back to, I think, the core of what we do as supervisors, because we need fairness, because with that comes trust. And trust is essential in this industry. And trust in this new technology is also essential, not just to be nice, not just to be compliant, but to really make sure that if we do this in a right and trusted way, we can continue on that path and also harness the benefits that I started with.
No, great. I think that's fantastic, setting out the opportunities, but of course, also as supervisors, it's natural to have a little bit more focus on the risks. I think you set those out very nicely, and we have assess those risks from an IAIS perspective, but also we've turned our attention to how are we going to help our IAIS member supervisors to tackle these potential risks in a way that also helps with global consistency. It helps with concerns about market fragmentation in how these are being addressed. Maybe you could talk a bit about that as well.
Happy to. So I think I alluded already a bit to it when I did the previous question round. IAIS did what it does. It first did a gap analysis. It looked at the ICPs that we have, the insurance core principles, and then we looked at the risks that we see in relation to the use of AI. And I think what we established was that the principles did not need change. We could work on the basis of those principles. And so at the same time, we did see that there were questions from supervisors. And I think it's great they raised these questions in the FinTech forum in the IAIS because it's an opportunity for a supervisory community to actually not only share the question, but also find ways forward that can result in also a better level playing field and more harmonization, because we start then from the same spot. So with that in mind, we published the final version of the application paper on supervision of AI. We did that last week. I thank everyone who contributed to the public consultation. I hope you recognize that we really took that serious, and it really led to some further thinking, some changes. So thank you for that. If you look at the application paper, I hope you had a chance or you find a moment, but it reinforces the importance and the relevance of the existing core principles, outlining how existing expectations around governance, around conduct remain essential considerations. And we recognize that the AI has a potential to enhance existing risks, but at the same time that the supervision of risks is covered by the standards. What we do say is that it is essential that boards and senior management educate themselves, and so, by the way, should supervisors at every level, to make sure that they understand what they look at. Now, going a bit more into detail on the paper, what we did is we chose to approach it through 5 topics. And I hope that anyone who's listening now to these 5 topics will say, okay, but these are the topics that you need to address anyway. And since we are technology neutral, you should do that for any technology, also for AI. But here we go. So the first one is risk-based supervision and proportionality. So we start with the fact that what we do has to be risk-based and it has to be proportionate by nature. You can adjust the implementation of the ICP based on proportionality and the risk that you see in the company. So I think that is the first one. The second one is governance and accountability. And this includes the need to integrate AI into the risk management system, provide human oversight of AI risks and considerations around the use of third parties. A lot of discussion around the use of third parties, by the way. So with governance and accountability, it's not something that you put somewhere. No, it's in the core of your operation because you use it for your operation. Third topic, robustness, safety, and security. I mean, clearly you need to consider the robustness, the safety, and security of AI system. It is technology, operational risk is there. You need to make sure you manage that. The fourth topic, transparency and explainability. Here we really touch on fairness and non-discrimination. So it sets out the need for AI outcomes to be explainable and tailored to the need of different stakeholders. And finally, really focusing ultimately on serving customers, fairness, ethics, and redress. It includes a need for the fairness of the design, the monitoring of outcomes, and adequate redress mechanisms. Not just, by the way, to serve consumers, but if you have proper redress mechanisms in place, you also get the feedback, and if you organize it well, the feedback loop that will help you to improve your AI system as well. And it very much also highlights the need for supervisors and insurers to consider the broad societal impact of risk pricing. Now, again, I want to thank everyone who contributed to this. If you haven't had the opportunity to read it, or if you still have questions on it, also a bit of advertising following the good example of Andy. We have a webinar next week where we also will explain more about this paper, and you're more than welcome to join. Back to you, Jonathan.
Fantastic. Thanks very much, Petra. And last question before we turn to the open Q&A, and I'll this one is for you, Shigeru, and of course we have all of these new themes, but the insurance capital standard, the ICS, remains a key part of the IAIS's work. As we know, we completed the first part of the heavy lift at the end of last year with approval of the adoption of the ICS. As well as the conclusion of the comparability assessment of the US aggregation method, which was a culmination of over a decade of work. But there's no rest, because we now move into the, I think, equally intensive implementation phase for the ICS. And maybe a question to you, how is the IAIS thinking about ensuring the timely and consistent implementation of the ICS across jurisdictions. And in particular, on the implementation assessment side, we set out that a first step was developing some high-level principles, which agreeing those high-level principles, which would then inform the development of the detailed ICS implementation assessment methodology. So that we did on schedule a couple of weeks ago, and those have been published. Maybe you can tell us a little bit more about those high-level principles, but also the next steps. Thanks.
Oh, sorry, I'm on mute. Oh, shoot. Yeah, thanks, Jonathan, for that. Yes, as you mentioned, last year was a very intensive process, but we did not pause. So I thank my colleagues, first of all, to continue to work on the implementation assessment process, which is, as you mentioned, is equally as important as setting the standards, because standards without the implementation is nothing in a sense. If you don't implement it, what is the use of putting together a standard? But here, I think what we have, first of all, is we have agreement that this will not be a line-by-line exercise, but we need to think about the granularity of the assessment as well as what kind of qualitative and quantitative aspects do we look in terms of our assessments going forward. So these will be a very important point. And as you mentioned, we did come up, first of all, with what we call the high-level principles, which will guide the implementation assessment methodology. And also we have agreed on the development of the self-assessment questionnaires, which will help jurisdictions to proceed with the implementation assessment. And we will, of course, follow the general IAIS principle for implementation assessment here. On the way forward, we have two things in mind. Number one, we need to make sure that there's appropriate time for the jurisdictions to put in place regulation supervision that is in alignment with the ICS. Also, we also need the IAIS to prepare for the implementation assessment. So how do we do this? We take example from our successful implementation assessment of the holistic framework supervisory material, which is a two-phase approach. First, starting with a self-assessment, and then the second phase, we move into a targeted jurisdictional assessments. So as I previously mentioned, by end of 2025, we will finalize the self-assessment questionnaire. Then in 2026, the jurisdictions will conduct a self-assessment to evaluate their progress in implementing the ICS and identify areas where additional sort of support or adjustments may be needed. And we will finalize the ICS implementation assessment methodology before the beginning of planned assessments. And as of 2027 onwards, the IAIS will aim to start carrying out detailed jurisdictional assessments of ICS implementation. And as I mentioned, as part of this process, the final USAM developed by the United States as its implementation of the ICS will also be assessed. And this will be subject to the same timing as the ICS implementation assessments in other jurisdictions and subject to a consistent methodology, both in the qualitative and quantitative analysis aspect, while also focusing on the AM specificities. So that is our overall thinking in terms of the ICS. So I'll hand it back to you, Jonathan.
Well, thank you very much, Shigeru, Petra, Andy, Siham, for sharing your thoughts on the key issues that are front of mind for the IAIS. Now, let's move to our Q&A session. And I have a first question, which is from Stephen Frank from the Global Federation of Insurance Associations, JFIA. Stephen, over to you.
Thank you. Good morning. I'll try to get rid of the psychedelic effect there. My apologies. So good morning. My name's Stephen Frank. I am currently the president of the JFIA, so the Global Federation of Insurance Associations. And I really do appreciate the opportunity to engage with you today and to really hear about the IAIS's thinking, and really very much appreciate the open dialogue and the ability to do this virtually and in person. So my question really is this: jurisdictions globally are facing slower growth and the need to boost productivity. It's more important than ever that insurance regulations support innovation and the efficient capital to allow us to build out even more our societal role. And JAFIA supports a principled, proportionate, and risk-based regulatory approach. And we also very much strongly believe in our critical societal role. And we're very pleased to see that as one of the IAIS's strategic themes, and was referenced several times today. But with this challenging environment in mind, where all jurisdictions globally are looking for productivity improvements, so I'm wondering if we get a little more color from you today on how the IAIS is thinking about balancing future updates of the existing ICPs and ComFrame against the need to support innovation and productivity in all markets, including emerging economies.
Thank you very much, Stephen. And Shigeru, maybe I can turn that one to you.
Sure. Thank you. Thank you very much for the question, Frank. That's a very important question, particularly in the current environment. As you rightly mentioned, my belief is that the ICP is embedded, and as you mentioned, with the principle of proportionality. And this is something that is, I think, very important, given that the ICPs do apply, and we have membership of over 200 jurisdictions. And it is very important that we emphasize this principle of proportionality, which can manifest its ways in certain ways. For example, if you talk about proportionality in terms of implementation, this sort of allows ICPs to be translated in jurisdictional supervisory framework in a manner appropriate to its legal structure, market conditions, and consumer needs. And if you talk in proportionality in terms of application, here the supervisor, it allows the supervisors to sort of increase or decrease of the intensity of supervision according to the risk inherent to insurers, the risks posed by insurers to policyholders, the insurance sector or financial system as a whole. So we have a sort of a proportionality embedded in the ICPs, which allows supervisors and regulators to look into various aspects and tailor their supervision according to its legal structure or its supervisory sort of objectives. So in that way, I do think that what you have mentioned about the importance of balancing innovation and growth can be sort of reflected in these terms of proportionality. In the next 5 years, we do not envisage any kind of major updates of our standards or to develop any kind of major new standards, but we do need to make sure that our standard remain fit for purpose, and as I mentioned, to continue to allow for innovation and efficiency. And we do have a robust feedback loop in place across our key activities within the IAIS that may inform any further sort of refinements or updates to our standards in the future, including on risk monitoring, implementation assessments, and also stakeholder engagements. So in continuing to refine our standards and our data risk request to support our risk assessment work, we will continue to strive to ensure what is put into place does not go beyond what is necessary in order to achieve their purpose. So I am confident that we have a good structures and process in place to ensure that this happens on the ground. Turn it back to you, Jonathan.
Thank you, Shigeru, for that answer, which I think captures it very well. Now we have another question, which is from Stefan Hall from Consumers International. And Stefan wasn't able to join us in person, so I will read out his question, and I will turn it to Siham to respond to. So it's around climate-related risks and how those are reshaping insurance markets and some consumers already face unaffordable premiums or the withdrawal of cover in high-risk areas, as Consumer International's members in New Zealand and Canada and other countries have already reported. So as supervisors assess climate-related financial risk, how is the IAIS ensuring that consumer outcomes, particularly equitable access to essential insurance, are considered alongside solvency and market stability objectives? And what more can be done to avoid deepening protection gaps as climate pressures grow? Over to you, Siham.
Well, thank you very much, Jonathan, and thank you for the representative of the consumer, international consumer. So the IAIS takes a holistic approach to climate-related risks, ensuring that consumer outcomes are considered alongside solvency and market stability. For example, the ICP 19, the conduct of business, emphasizes that the need for insurers to treat customer fairly, provide clear and timely information, and ensure that products meet the needs of the target market. This is particularly relevant in the context of climate-related risks. The IAIS has also been actively addressing protection gaps in its recent work. We have heard an update on the G20 input paper, which was drafted in collaboration with the World Bank and highlights possible action different stakeholders can take. This builds on previous work. For example, the call to action we published in 2023. This report outlines strategies to improve consumer awareness, access, and affordability of NatCat insurance. In this context, supervisors can play a key role in improving consumer awareness of climate-related risks and the importance of insurance. This includes encouraging insurers to provide a clear, plain language information about NatCat coverage and exclusions, as well as promoting risk mitigation measures such as flood defenses or resilient building practices. Additionally, there is a role to be played by scenario analysis, which can be a valuable tool for supervisors to understand the impact of NatCat risks on pricing and insurance availability. To avoid deepening protection gaps, we need to explore innovative solutions such as parametric insurance, and we have a parametric insurance also in Morocco, and microinsurance. Also public-private partnership, and Andy spoke about it earlier. These approaches can help provide affordable coverage for high-risk area where the traditional insurance model may no longer be viable. Moreover, tackling protection gaps effectively requires collaboration between insurers, supervisors, government, and other stakeholders, including civil society. I think that civil society and consumer organizations have an integral role in raising awareness about the importance of insurance in managing, particularly in underserved area. They help build trust by acting as intermediaries and by facilitating a feedback loop between consumer and insurers. They also have a role in promoting financial literacy and risk awareness more generally, including incentivizing risk reduction measures. Looking ahead, building on our report to the G20, the IAIS and the World Bank will continue our effort to provide practical guidance and tools to assist policymakers and supervisors, especially those in these markets, in addressing NatCat protection gaps. We will explicitly seek opportunities to work together with the other international organizations and partners to support stakeholders in implementing targeted and sustainable solution to strengthen resilience against NatCat events. We look forward to engaging with the consumer bodies on how best we can collectively bring about the action that need to be taken. Back to you, Jonathan, and thank you.
Great, thank you, Siham. And then our next question is from Nick Dexter from the International Actuarial Association, and I'll read that one out as well. So the IAIS mentions in its strategic plan that you will continue to seek opportunities to collaborate with partners in addressing challenges posed by NatCat protection gaps, so the exact point that Siham was making. Do you have in mind any opportunities which could be supported through work by the actuarial profession? And maybe, Andy, if I could turn that one to you.
Absolutely. Just wanted to make sure I was unmuted here so I could speak. And yeah, it's great to hear from IAA. We had a meeting, and by we, I mean the IAIS had a meeting with them probably less than 2 weeks ago. And it's a great group to be involved with. I'm in insurance, and to respond to the question, I don't do anything without actuaries. So we expect the IAA to have, and the actuarial profession as a whole, actually, to have an important role in these collective efforts. And part of it goes back to what I've said earlier, and I know you may be tired of hearing it, but addressing the complex social challenge and NatCat protection gaps is an urgent issue, and it does require that concerted multi-stakeholder action. The input paper, which I mentioned earlier, which we collaboratively drafted with the World Bank, did provide examples of practical actions that can be taken by different stakeholders, including, of course, industry, supervisors, policymakers, and beyond. And the IAA and its member associations, like my good friend here in the US, could potentially bring great expertise and experience to support some of those actions. For instance, risk assessment, data analysis. Actuaries can support with assessing protection gaps by analyzing the exposure to NatCat risks and quantifying the financial impacts of these events. Then there is, as I mentioned earlier, innovative insurance products. We need those products to address the protection gaps, particularly in emerging markets and developing economies. But frankly, certainly as a more mature market, we need them everywhere. And actuaries can support the design of these innovative insurance products that would be tailored to address the protection gaps. Actuaries are essential in ensuring that insurance products are priced accurately to reflect the underlying risk. You have to address the affordability issues, and that's your particular area of focus there could be how to incorporate those risk reduction measures. So flood defenses, disaster-resistant construction, fire issues. How do we incorporate those into the pricing models? And going back again, I'm repeating myself, but it is just so important to be able to incentivize policyholders to adopt these measures. Policyholders need to know that this will support their availability and affordability of insurance. And, with actuaries pricing it properly, that certainly would be helpful. We need, of course, again, I feel like I'm repeating myself a lot here, but it is, there is so much that bears repeating. Supporting public-private insurance programs. Actuaries can contribute to the design and the implementation of those programs. For example, you can model risk-sharing arrangements. And then actuaries can play a key role in building technical capacity in EMDs, for example, by training local professionals, developing tools and promoting collaboration to facilitate that knowledge sharing exchange. And I know certainly, this was a question from Nick at IAA, and I do know that there is an existing partnership between IAA and A2I, the Access to Insurance Initiative, that is a great example of this. For certainly our part, addressing those protection gaps, as I mentioned before, it must stay a priority topic for us as an organization. And as Siham mentioned, follow-up work on our report to the G20 will aim to provide practical guidance and tools to assist policymakers and supervisors in addressing these NatCat protection gaps. We certainly look forward and consider this an invitation, Nick, and every other actuary here. We look forward to engaging with IAA on how best we can collectively bring about the actions that need to be taken. We need you. Thank you.
Thank you, Andy, and all the actuaries in the audience. You heard it here first, a very open invitation to be part of the solution. Thank you, Andy. And now I'll turn to Anar Kara from CGAP. And Andy, you referenced in your response just now the Access to Insurance Initiative, which is IAIS's key partner on financial inclusion and resilience. And so it's fantastic that with effect from the beginning of this month, the Access to Insurance Initiative is now hosted by and convened by CGAP within the World Bank group. And if we could turn to Anar now, who I know has a question on one of the themes that we covered already.
Thank you very much, Jonathan, and thank you to all the panelists. This has been a really interesting discussion. Yes, my question is on digital financial services and the rise of technology, and it's been touched on a lot, but you know, one of the things that we're seeing from a consumer perspective is that there is evidence that consumers are experiencing a rapid growth of frauds, of misuse of their data, and even exclusion risks from technology. And so I was wondering how the IAIS incorporates these types of growing consumer risks in its standards and guidance. Thank you.
Great, thanks you, Anar. And you know, I think there's a great combination there in CGAP between the work on financial innovation and consumer protection and making sure it's responsible innovation. And I'll turn to Petra on this one, because Petra, I know you touched on this, and maybe you can expand on how we're thinking about it. Thanks.
Yes, and thank you for the question, and really emphasizing on the need to be fair to consumers. In the interest of time, I'll give a concise answer because I have alluded to it. So I think the consumer protection was core in the way we dealt with our AI application paper. And so the fairness and non-discrimination, but also the redress is an important part, being sure that the benefits of AI, I refer to a quick claims handling, that they are still there, but that's detriment to consumers, exclusion to consumers, pricing on the wrong basis of products for consumers should not happen. So fairness by design is very much the starting point of our paper. Because I said already something about that, I'll leave that. But I think what I want to focus on is particularly then also the redress. So what if the computer says no, or you feel mistreated? It can't be that there was a computer saying no. It has to be an insurer. It has to be a person. You need to find redress in a proper way. And here actually the IAIS requires insurers to provide transparent, fair, and timely redress processes, and they do so under ICP 19.10 and 19.11. And in this context, whether it's an Excel spreadsheet or AI, that is actually not so relevant. It always includes that consumers can challenge the decision that was taken. And if that was with an AI system, then that's decision that they want to challenge. Because there is inaccuracy in the data, because there is an unfair treatment on the basis of the data, or just because they really don't understand and they need a proper explanation. That is there. We will continue to work on that as well. And we do not only do that in the FinTech forum, but in the IAIS, we also have a market conduct group, and we closely work together with them to make sure that the perspective from the consumer and the consumer protection is at the core of the work we develop on supervising AI. I'll stop there, Jonathan.
Thanks very much, Petra. And we're running a bit into buffer time, so I will limit it to 2 more questions before we close. And one of those questions is from Andres Portilla from the IIF. And Andres, are you still with us?
I'm here, Jonathan. Can you hear me?
Yes, very well, thank you.
Yes.
And we can see
Great.
you too.
Thank you, and thank you for this opportunity. It is extremely helpful, as always, to be able to have this dialogue. As you know, the IIF is a cross-sectoral organization, and we have not only a significant amount of insurance companies, but also banking organizations. So my question goes to that cross-sectoral nature of the work, particularly on the topic of climate. So I wanted to ask you about what kind of collaboration or exchange is happening between the Basel Committee and the IAIS on this topic. Primarily also as Basel has reshaped its work on climate and is now very focused on physical risks and the impact that those can have on the banking industry. So I wanted to ask you, from a cross-sectoral perspective, and particularly around physical risk, the dialogue and collaboration between you and the Basel Committee. Thank you.
Great. Well, we benefit from a chair of our executive committee with strong cross-sectoral experience. So, Shigeru, if I could turn this to you.
Thanks. Thanks, Andres. Good to see you, albeit on the web. Yes, to your question, first of all, we are working a lot with all the standard setting bodies, also with the FSB in this regard, collaborating with UNDP, a Sustainable Insurance Forum, as well as the NGFS. So we do work in a sort of a cross-sectoral space on this issue. And as you may know, we did publish our application paper on climate-related risks this April. In the course of that, we did do a gap analysis comparing ourselves with the Basel Committee's principles, which they published in 2022. So in that sense, I think we have alignment with what the Basel Committee has done in the past. Albeit we also look at insurance-specific dimensions. You mentioned about sort of the challenges with respect to climate-related work that is happening on the ground right now. As you know, the Basel Committee and GHOS has publicly expressed that they will try to focus more on extreme weather events and the implications, the financial stability implications from that regard. And the FSB also met, they had a plenary, which I attended last month, which also, I would say, difference in sort of the phrasing, but the message is the same, that they would also look at the implications stemming out of extreme weather events. So in that regard, we are in contact with the FSB, but also with the Basel Committee to try to make sure that we can communicate our perspective and also benefit from what they are thinking in terms of dealing with extreme weather events. So I do think that there's good coordination, cooperation with respect to the evolving nature of climate-related risks and the focus in terms of the FSB and the standard setting bodies, including the Basel Committee. I'll stop there. Thanks.
Thank you, Shigeru. And before we finish, we received one quick follow-up question on the chat, which is from Ryan Mensing, who was asking that, following up on the earlier remarks about implementation of the ICS, does the IIS intend to publish public or market-facing FAQs or similar guidance on the interpretation and implementation of ICS? So, Shigeru, maybe I can ask you to cover that one.
Thank you. Thank you very much for the question. And first of all, I'd like to emphasize that the IAIS very much values stakeholder engagement, as emphasized by vice chair, all the vice chairs that who are present here today. On the implementation assessment of the ICS, I think we must be mindful that this is about implementations of jurisdiction and not about implementation assessment of IAIGs. So in that sense, what we are looking for is to how to assess the jurisdictions rather than the insurers themselves. Therefore, following this sort of thinking, we are not intending to consult on the high-level principles. We have already published this, but also on the self-assessment questionnaires and the detailed implementation assessment methodology. And I just like to note that this is consistent with what other standard-setting bodies do. Particularly, I like to highlight the Basel Committee on their RCAP methodology assessment, which they also just keep it within the Basel Committee for discussion. But this doesn't mean that we do not value views from stakeholders. So we intend to have a stakeholder engagement session, perhaps in September. We have not yet confirmed any kind of date or time on this, but we do think that it would be beneficial to receive inputs with a dedicated virtual event coming up after summer. And there we will seek input from insurers on what we have published and what we will publish in the future. And I think this reflects our commitment to balancing sort of the process with the jurisdictions, with at the same time with meaningful stakeholder engagement and input. So thank you very much for your question.
Excellent. And I know we're running short of time, but we did have one additional question that came through, which we can try and cover very quickly, which is from Robert Neal, at head of International for APCIA. Let's see if we can bring in Robert. Sometimes it takes a little bit of time to do that.
Can you hear me, Jonathan?
Yes, Robert, thank you. We can hear you.
Great, great. Thank you for the opportunity. I had a brief question here that I wanted to pose. The IAIS has participated in the IMF World Bank meetings in the past, providing valuable information to global participants about the key role of insurance. My question is, will the IAIS participate in the October IMF World Bank meetings to discuss NatCat protection gaps and the new IAIS strategic theme of societal resilience? And would it be possible to explore a roundtable including industry representatives possibly?
Perfect. Well, I can give a couple of remarks and then hand over to Shigeru as well. I think, as you will have heard today, our work on addressing NatCat protection gaps has been very much in partnership with the World Bank, and certainly we've been talking to them about the fact that it would be very beneficial to have an event as part of the October IMF World Bank annual meetings, a session together with the World Bank on this topic, and we can talk specifically about our G20 paper as well. So I think we should be able to know more about that and confirmation in the next month or two, and share that with all of you, and the idea of a sort of roundtable discussion with industry folks as well. We can discuss with our partners at the World Bank, but not sure, Shigeru, if you have anything to add there.
Sure, thanks. Thanks very much for the question. And yes, this continues to be, NatCat will continue to be a very important work. And as I mentioned, and I think Andy mentioned as well, that we have, together with the World Bank, provided an input paper to the Sustainable Finance Working Group of the G20. And I think this work will continue on. And in that regard, I think it makes sense for us to collaborate with the World Bank to perhaps host an event in the margins of the autumn annual meetings, which can, I would agree that we can benefit from industry's views. So that might be an option that we can pursue with the World Bank. And hopefully with those inputs that we are able to sort of refine and provide a more detailed sort of deliverable in the future. And I think this sort of demonstrates that this work will continue to be important in the global space.
So thank you very much. Before we wrap up, I did want to hand the floor back to Shigeru to also share some news about leadership transition for the IAIS later this year as well. So Shigeru, if I could.
Thank you very much, Jonathan. And I'd just like to mention that as part of a sort of a regular rotation at a financial service agency of Japan, I will be stepping down as Vice Minister of the FSA of Japan, effective 22nd of July. So that'll be in a couple of weeks. I plan to go to Durban in South Africa to be a host for the IAIS World Bank event in the margins of the finance ministers and central bank governors meeting. But that will be my last job as Vice Minister of International Affairs. As of that time, I will serve as special advisor to the Minister for Financial Services in Japan, which would enable me to continue to carry out my role as IAIS chair and support a seamless transition to a new IAIS chair, who will be elected later this year. And during this period, I remain fully committed to the IAIS and its mission, ensuring continuity and stability as the organization moves forward. I just would like to mention that it has been an honor and a privilege for me to serve in this capacity over the past 2 years. What I'm proud of myself, and also I'm proud of my colleagues who were kind enough to collaborate and cooperate, is the significant progress the IAIS has achieved during this time, particularly the finalization and adoption of the ICS, which stands as a testament to our collective dedication and collaboration. And I have full faith and full trust to the IAIS leadership who are graciously attending today, the membership themselves, and also to the secretariat led by Jonathan to continue this important work forward. So I'll stop there, and thank you very much, everyone.
Well, thank you very much, Shigeru, and I would also like to thank you personally, but also on behalf of our membership and the Secretariat for your truly excellent leadership and for steering the associations through so many important projects over the last 2 years. And I think we'll certainly have some very big shoes to fill, but we'll also have other opportunities to say farewell and thank you. So I'll leave it there, but really, thank you very much. So as we are coming to the end of today's session, I'd like to remind you that tomorrow we'll hear from our 3 committee chairs, and we will start at 1 p.m. With those sessions. And also to say, if you haven't already registered for those sessions, you can do so now on our website. And lastly, you will have seen on the screen a QR code which will lead you to our feedback survey, and we'd be very grateful if you could take less than a minute of your time to let us know your feedback. Many thanks for joining us today, and goodbye.